Okay, thanks for coming back to the 1045 report. I got something here that can possibly make a lot of money, but it's very dangerous. Okay, this comes back to my concept of burn money. You're going to need to have a couple stacks of $100 bills handy and be ready to light them on fire. Now, of course, it's not the intention to light them on fire, it's the intention to make tremendous returns with it, because with high risk comes high return. So basically the concept is this: 5 minutes before close, you're going to be making a bet that there's going to be either a big gap up or a big gap up the next morning at open. So say that the market closes at, the QQQ closes at 180, and something comes up on, we're going to be reading the charts down here. We're not going to be looking at a blue sky day up here. We're going to be reading these that are going to tell us that this is going to happen. If suddenly there's a big gap up due the next day, where you think all of a sudden like the market closes, but it's going to open up here, you want to 5 minutes before close buy an option at the money at the current week that expires in 1 or 2 days from now. So it expires of the Friday of the current week you're in, for maximum volatility gains, for maximum oomph. So, let's say it closes here, and right before it closed, you got in with a at the money call option. All of a sudden, it opens up here, like 5-6 points higher. You're looking at a 2 or a 3 bagger, 200 to 300% return. I've seen 1,000% returns the next morning. However, this is kind of dangerous, but I have found, now how do you find these? Okay, it doesn't happen every day. The market usually chugs along and opens pretty much where it was the next day, and sometimes this stuff happens. So what I do is I look at these indicators here. See the red and the green indicator. This will tell you the setup of the next day. If you want to buy a put or a call at the money, same week expiration, and do one of these plays. Again, you can make 2, 3, all the way up to 500, 1,000%, boom, the next morning. But you could also very easily light your $100 bill on fire and or part of that money. So let's take a look at some of the setups I wrote down here. Okay, I have 3 different setups. One setup is called a link. Okay, these are just the names I gave them. The next setup is called a crossover, and the next setup is called a MAW, M-A-W, and I will show you an example of all 3 of them. So right here is, see the time date stamp right here? As I go across, the line follows it across, and again, these are in 15-minute intervals. So every time, 15 minutes, 15 minutes, 15 minutes. Now, when the market closes of that, that day, while you're doing this, you won't be able to see the one right at the number itself of the new day. That won't show up till the next morning. What you will be dealing with is the time right here, 15 minutes before, as these lines are forming. So you want to do it like about 2 minutes before close, once you think the lines aren't going to be moving anymore. So let's look at an example of a link. We will be going to October 15th and 16th. Now right here you could see that during the day it was linking. It was going back and forth, winding, let's get rid of that, winding back and forth over under each other. And then right here, 15 minutes before close, you won't see it at this point until the next morning. 15 minutes before close, you see the red is above and green is below, and it's about to form another link. So what you would do in this case, when you see something like a link trade, you will go the opposite way, whatever's on top. So the red's on top, so we're going to bet that it's going to go up. So red usually means down, green means up, but it's the reverse when you're looking at a link. So that means with the red on top, we're going to buy a green call option. We're going to buy a call option betting it's going to go up. And we're going to do it at the money that expires in the current week you were presently in. So let's see what happened with that. We bought it, and you could see that the next day, it did jump up. So you always want to get rid of it, 10 minutes, 15 minutes and open. And you want to sell the option, and you want to take the money. All right, let's look at another example of link. It was happening during the previous day. So here it is, 15 minutes before close. That's all you could see. You wait until about 5 minutes before close, and the green's on top, making the link. So that means you go the reverse. You want to buy a put option, okay, at the money that expires the current Friday of the week you're in. and you buy that, and let's see what happened the next morning, and boom, yep, it came on down. About 10 minutes to 15 minutes in the market, you sell, and you take your money. All right, that is an example of the link setup. Now let's look over at MAW, an example of MAW. Let's go, let's see, wrote down October 3rd. Okay. October 3rd. All right, so that is not a good example. We're going to go to crossover instead on the 27th. Okay. Now here it is at 14:45, but beforehand at 14:30, you can see there was a crossover. The red crossed over the green. When you see a crossover, 15 to half hour before the time period in at 14:45, because this happened over here, that means follow what it says. You don't do the reverse. The red crossed over the green and went above it. You bet on red for the next morning, 5 minutes before close, and you purchase a put option at the money. It expires the current Friday of the week you're in. Now let's see what happened. Yep, boom, went down. Okay, so that's an example of crossover. Now let's look at MAW. Let's go over to the 21st. Okay. Now let's go to the 19th. Here's a good example of MAW. When you see it start to open up right here at the very end of the day, and you're like this, and it's like opening up like a mouth, you know what I mean? And you see it's not going to chain link anymore, and cross over, but instead you see, one color start to go up and one start to go down. That's called a MAW, like a mouth opening up. You go with the top color. Okay, so in here it's not the reverse again, like chain link. It's the top color. So here it's red, so that means down. So we're gonna buy a put at the money at the current week we're in. So let's see what happened. So it opened up and then rocketed down. There, boom. Okay, let's look at the 18th. 18th is another good MAW. Okay, 14:45. We can't see over here. We don't know what happened here yet. So that's all we're able to see. We see MAW happening. Okay, we see the red going up and the green going down, opening up like a mouth, and that one failed. Okay, that's not always perfect. So as I said, this could be kind of dangerous. So let's go to the 18th. I already did that. Let's look for an example of crossover. 13. So we're back over here. So here's 14:45, but look, it crossed over. Okay, so the green, about a half hour beforehand, it crossed over. The green went above the red, and it didn't touch yet. So now it's above the red, and the red went down. And so, in a crossover, you pay attention to what happened. The only one you're doing in reverse was link. Crossover, the green's on top. So right here, I didn't see a crossover yet. At 14:45, they look pretty solid, not crossing over. So I would buy an option call 5 minutes before close. At the money, current week I'm in, expires that Friday. So let's see what happened. Okay, huge jump. Okay, so that's how you do that. Let's see, September 4th. Let's try to find you one more MAW. September. Well, here's one. Okay, so 14:45. You see what's happening? You can see it start to open up. So you could only see up to this point. But it's starting to open. It's starting to open up here. The red's going up, the green's going down, like a mouth. And then you would always pay attention to the top one, and that's the way it's going to go. And I would say it's going to go down. And look what happened. It opened and rocketed on down. So, if you do this correctly, you could win maybe 7 times out of 10, 6 times out of 10. But since the result is like a 4, 2, 3, 4, 5 bagger. You could lose a couple times and then hit that big one and get your money back. So, again, it's dangerous. You only do this when you have, and each option's worth about $100 because they're real cheap options because they're expiring in 2 to 3 days. So if you have some money put to the side and you like the action, and this is high risk, you go ahead and play this. I wouldn't recommend this for beginners. For beginners, I would just stick with the 3-week out options earning system and the 45-minute charts from examples 1 and 3 above on this page. But if you do crave action, This will give you some of that. All right, thanks for watching. Bye.